like to pick up again on your thread here about housing. I mean, the ITB down about 5% in a week.
Yeah.
So maybe we're not quite there for this reignition point because of rates or otherwise, but you also bought something else in the space.
Yeah, QXO.
And why?
it's a, well, because...
It used to be called Beacon something. Why can I not remember? Beacon Building something?
Silver Technologies.
Okay, but it's
they bought
QXO.
Beacon. They bought Beacon.
Oh, they bought Beacon, rather.
So it's led by an industry pioneer, Brad Jacobs.
Okay.
He was at United Rentals. He was at XPO. He's at Waste Management. He's a rock star. He has put $1 billion of his own money into this company, and this company is really just all about making acquisitions in the building products distribution industry.
Okay.
And so I think it's a hidden way of playing the construction, housing, just rebuild play. They have best-in-class EBITDA. They're growing 5 times as much as the industry. It's trading at a discount to the industry, and I just think they have the best technology. So they buy these, they make these acquisitions, and then they use technology to get more efficient, productive, and that sort of thing. Hence the profitability story. And so I think this is just a hidden way of playing the cycle in general.
Josh, you own Invitation Homes, Rocket companies. You want to hang on to them if rates continue to fall in this environment?
Yeah, so to be clear, I don't view Invitation Homes as being a rates play per se. It's rental housing, and this is really about the distribution. It's a REIT and just reinvesting that distribution. But on Rocket, look, I've talked about the stock. I added it. I think my average cost is like 13. I have not sold any, despite the fact that it hit almost 22 the other day. I really think that this is one of the big turnaround stories that is sensitive to the rate cycle and to housing. While the housing market has been in this, I've called it an ice age, existing home sales depressed, lack of activity, realtors miserable, mortgage brokers miserable. I think we're coming out of that, and I think Rocket is one of the preeminent ways to benefit from increased activity in the housing market. Just like as a mental exercise, you picture the millions of people who become eligible for a refinance as rates drop from, they were north of 7, 30-year mortgage rate. If they get down to 6, if they get down to 5, it's millions and millions of opportunities for refis, for homes to turn over, and that's all playing into Rocket's wheelhouse. They have spent this ice age making acquisitions. They bought one of the largest portfolios of mortgage servicing, Mr. Cooper. They also acquired Redfin, which is the biggest driver of leads to realtors and to mortgage brokers. Like, they've been investing while this market's been in an ice age, and once it thaws out, I think the leverage and the benefits accrue to the shareholders of in RKT.
You know, it's also interesting. I own D.R. Horton and Toll Brothers, some more pure play housing calls. These stocks are up 20, 30%.
Rocket's up 82% year to date.
Well, these two are up from when they reported third quarter.
Okay.
And the third quarters, they were horrible.
Yeah, they weren't.
They were horrible in terms of demand, right? In terms of deliveries. But gross margins were actually better than expected. So they're doing the best that they can. And I think, obviously, we know the market is a forward-looking indicator, and everyone's looking at lower interest rates, and maybe that's going to fuel these stocks. But there's so much more to go because these stocks are so incredibly cheap. 12 times earnings for D.R. Horton, 10 times earnings for Toll Brothers. Toll Brothers is the industry leader, trading at 10 times earnings. I mean, I just think that these are still buys.